Scott here talking about the U.S. stock market and what's ahead in this world of crazy headlines and the threat of war in Europe. We're looking at a situation where the market, the U.S. stock market, and the majority of its investors, large investors in particular, are going to try to determine just how much risk they are at for losing money in the markets. And the Friday session was kind of a down, and a Thursday and Friday both were sort of a down trend that seemed to indicate people thought it was more risky than they had been thinking. And they sort of shrugged off the good news from the jobs market and sold down shares anyway. Well, nobody knows exactly what's going to happen there, but I noticed this stock yesterday on Thursday and Friday, and noticed its characteristics. I want to share it with you here. This screen is for GoGo In-Flight Incorporated. If you ever fly one of the major airlines and you connect up through one of their, you can pay some money and have internet while you're flying, or enhanced internet. This is the company that brings that to you. Okay, so they're an in-flight independent service provider, Wi-Fi connector. That's all they do. And they jumped 20% on better than expected earnings. They were estimated to have 9 cents a share. They made $1.60 a share. Huge, big jump in surprising result. Their revenue was supposed to be around $90 million, and they came in at 92. So that also was a pleasant surprise for investors. And share prices went from $13 all the way up to, they closed at $16.42. So about a 20% jump in one day. That's pretty good. Wouldn't you like to know how to find a stock that was going to do that? The next stock that was going to do that? Well, I don't know how to nail it down, but I did notice one important characteristic that this stock had that we could search for, and I thought I would share with you what that was. Is there any indication that gave you the idea that when earnings come, if the news is good, that the price could jump significantly, not 3 or 4 or 5 or 7%, but 20%, right? How could we identify a stock like that? And the answer is, if you have a stock where a lot of people are short, they expect bad news, and then all of a sudden the company comes out with good news, then those people are stuck and they need to hurry and get out. And that is a little bit of a short squeeze that occurs, and earnings is what triggers it. So how can we search for stocks that are vulnerable to a 1 or 2 day short squeeze associated with earnings? So that's what I'm going to share with you here right now. To find these stocks, we can go to FinViz. So I did that, and here I'm just going to show you the attributes that came up with GoGo, and notice that there are other stocks that do this same thing. If I go to float short, that is how many of the outstanding shares in the float that are out there in the markets available to buy are on this stock set up as short positions. In other words, bets that the stock is going to go down, maybe even the company go bankrupt. And if, in fact, you have more than 20% of all the float that's set up as short, that's a very high number. There's another number we want. I'll show it to you in just a second. But if I just search on all the stocks out there that have a float short over 20%, there are 115 of them. Could I find any of them that have earnings coming up soon, like in the next 5 days? Well, yeah, I can. Right here where it says earnings date, and I say next 5 days, then I've got this list of stocks. Now I'm going to even expand that a little farther and just say this whole month. It would be nice if they had next 10 days, but well. So I'm going to say anytime during this month. And that gives me 28 stocks. Now I'm going to say I just want to look at those that have an average volume of over 500,000 K. So I want these to be sort of liquid. There's still 24 of those. And then last of all, I want to make sure the price is, let's say, over $5. That gets us 17 stocks, one of which is still GoGo. And so look at the numbers on GoGo. 2 days ago, these numbers were very similar. The short ratio is 27. The float short is almost 23. Let me tell you why these numbers are so important. What it means is that 22.98% of all the outstanding shares are being held in positions that were initiated as short sells. They're going to try to profit from the stock going down. 1 out of every 5 shares that's being held in that stock are being held by people that think it's going down. That is a high number. Anything over 20% is a high number. That's a high number. But the more important number that is also high is that one right there, the short ratio. So based on the average volume, which we see here is about 600 million or 600,000 shares a day, based on that, how many of all the shares that are short, if they were just to start getting out at the sort of regular pace, that 600,000 shares a day, how long would it be before those people were fully out of the stock? And the answer is 27 days. So the bigger that short ratio is, the larger your chance for there to be not just a blip, but even a sustained short squeeze. So we want that number to be as high as it can be. Anything above 5 is pretty good. Anything above 10 is really good. Anything above 20 is amazing. So just to give you a comparison to work with here, GameStop last year, a little more than a year ago, GameStop's float short, well, about a year and a half ago, GameStop's float short was over 100%. So that's kind of weird that they could do that, but derivatives and a few other things made that to be the case. So it was a very, very unusual thing. And the short ratio for GameStop was up in the 40s. And so it was, much bigger numbers. That being said, these numbers here, there aren't any other stocks in this list that have anything comparable. But we do have some that are pretty good. For example, this one here, Dick's Sporting Goods, this has 22% float short. The average volume is 2 million a day. At that rate, it would take 6.5 days for the shorts to liquidate their positions. And so that that's going to be a move of 1, 2, or 3 days at least. And oftentimes when you look at these, they've already begun or they've already done their short sell because this float short number sometimes has a lag. Here's an example of that. JWN is Nordstrom's. So if I were to come out here and look at the chart of JWN, notice that the earnings came and the news was good. It was nice and surprising. And what happened to the stock? It went from 19 to 25, 26. So again, another 20%, 37% actually kind of jump. That's nice. We really want to see stuff like that if we can be hanging around there. But it's already happened, you see. It jumped way up all at once. And that float short on Nordstrom, it was 6 days. So there may be yet more to go. But as you can see, the next 2 days after that one jump, they were done. Dick's, on the other hand, we want to try to find something that has not had earnings yet in that list. So DKS, see, earnings are still coming up. We've already begun to move. The shorts might have already done their work. That might have been the short squeeze there as people began to anticipate the possibility of good news. So that's what we're looking for, though, DKS. Now, there's another stock here, Big Lots, BIG. They're kind of a discount store, and they've already had their earnings. They had a nice push, but again, we're looking for the stuff. Oh, and then there's AMC. This was the stock last year had a big short squeeze right along with GameStop. Strangely enough, they still have a float short of 20%, but look at their short ratio. It's only 2. That's because they trade a lot more heavily now this year than they did last year. They're trading 50 million shares a day, whereas before they were well known, they were trading under 1 million shares. So we're looking for stuff that has this short ratio that is at least above 5, preferably above 10, and they haven't had their earnings call yet. So how about this one, Big 5? Let's have a look. Nope, earnings have already come there. And I'll save you the trouble. I'm just going to go to the one that IBC. Here's a company, Invacare, coming up this week. It's coming up on, looks like Tuesday. On Tuesday, this company has earnings. Their float short is also over 20, and their short interest, or the short ratio, is over 6. So this could be one that could make a big jump. Now, they're only a $2 stock, so that's a little more risky because it's a penny stock. But look how easy this would be, right? If you get in somewhere here around 220, whatever, and then you have your stop loss set at 190, you're going to be risking 30 cents a share. If you're wrong, it drops down to there and you lose 30 cents. If you're right, however, I mean, that could be much more than 20%. Even a $1 move would be a 50% gain, getting right back up here to its old highs. So that's a possibility. And Marathon Digital. Oh, sorry. I thought they were one that had already or hadn't done their earnings yet. Let's go, next 5 days, and we'll just make sure we're looking at stuff that is still coming up. See, that one, the short ratio is very short, but here's this one. Woof. Yeah, that's what we want. Petco, Health and Wellness Company. So this is a pet store. And I saw this also on Petco. They don't have a short float, but see, this is what happened to Petco. Right after their earnings, they had a poor earnings, mix. They came in lower. They were expected to make money. They lost money. They did have good sales, though, and then the stock went down. But then all of a sudden, boom, up it went, right? So basically, we've got people putting money into pet stores, investors, large investors, putting money into pet stores. This one has yet to do its earnings, coming up on Tuesday, and it has been battered down quite a bit because it has a float short of 22% and a short ratio of 10. It'll take 10 days at its normal volume of 1.5 million shares, so it's a very liquid stock, for all the shorts to get out of the way. So I think that these ones here, Dick's Sporting Goods and Woof, WOF, are probably something to look at. You really like to find stuff that has its own story, totally independent of whatever's driving the headlines right now. And that's what these are. So hopefully that information will give you an idea to go hunting for good stocks to trade. Until we do this again next time, take care and trade well.